Welcome to the M2I Alternative Investments Chat, where we demystify the world of alternative investments and financing for entrepreneurs and investors alike. With these discussions, we hope you're more empowered to unlock new opportunities in your business or portfolio.
All right, welcome back. Today, we're going to focus on non-accredited investors and the alternative investment options that they have available to them. We focused a lot on accredited only, so now we're going to talk about the other half. So Aaron, let's remind everybody what an accredited investor is, and then we'll talk about non-accredited investors.
Yeah, is an individual or business entity that is allowed to trade securities that may not be registered with financial authorities. They gain this privilege or access by having earned $200,000 for the past couple of years, and they foresee that to continue happening. That's for a single person. If this is a joint entity, a married couple, that jumps to $300,000. And then there are some educational degrees or professional experience that can also lump you into that. Or it could also be someone who has a net worth of $1 million, and that excludes their primary residence. So like I touched on, these privileges, they're able to, if you've heard about the SEC, they're able to trade those securities that are not registered with the SEC. And most companies have decided to offer securities to this class of accredited investors directly. And this is because they are usually seen as being more financially savvy, or also being able to absorb any sort of financial loss that they may have for an investment that doesn't turn out exactly as they had planned.
Got it. So for some investments, you have to be accredited. As you kind of touched on, and alternative investments have the potential to present an accredited investor for a great deal of risk. And so, like you said, you have to make sure that they can absorb that loss if something was to go sideways. Also, like you said, they're most likely going to either have a financial planner that is assisting them or a wealth advisor, so that they have a lot more knowledge out there than a non-accredited investor. So you talked everything that covers accredited investors. So those non-accredited investors are just everybody else who doesn't fit into that, correct?
Yes, exactly.
Awesome.
And I think that a lot of people perceive that these accredited investors, while they do have a broader scope of opportunities available to them, I think sometimes people get nervous. Oh, I'm a non-accredited investor. I can't invest, or what can I even do with that? And today we're going to be talking a little bit about that.
Yeah. So again, we want to just touch on, this is a podcast about alternative investments. So we want to just quickly remind everybody what an alternative investment is. And that's simply an asset class that excludes stocks, bonds, and cash. Some of those examples are private equity, venture capital, hedge funds, art and antiques, commodities, and even real estate. And the reason, again, that a lot of investors invest in alternative investments is to diversify their portfolio. But a good portion is because it attracts really high returns, even though there is a higher risk associated with that. But again, a lot of these people who are accredited can take that financial risk because they are in that specific economic background.
Position.
Yeah, exactly. They have the monies, we don't.
Yeah.
So what are some of the challenges, though, for non-accredited investors? Let's chat on those.
Yeah, for sure. I mentioned the SEC earlier. So those regulatory restrictions are definitely something that can get in the way of investing, because you have to be an accredited investor and to participate in certain investments, you have to meet those requirements. So that can be hard because you, again, need to be able to absorb that financial loss in order to participate in certain investments that require you to be accredited. So your scope of investments naturally is smaller. That doesn't mean that it's none, but it is smaller and a little bit more limited. In the past, a lot of these alternative investments have been limited access. Still there is restrictions and regulations, but it has become more open. Still, a lot of alternative investments are dealt with through private placements or limited partnerships. So that can also be a barrier to access as well. And then also high minimum investments. We touched on the money thing. It's all about the money, honey, in this world. So a lot of these investments and investing in general, one of the biggest barriers to entry is having income or funds that allows you to participate. And a lot of alts sometimes have these high minimum investments, 50,000, 100,000. That doesn't mean all, but there are definitely a vast majority that require those higher ends.
The last thing is, there's that that risk of fraud. A lot of non-accredited investors don't understand the alternative world. And so the SEC puts these regulations on so that we protect them. It's not to say that we don't want them to participate or make money, have their money make money. It's just that they put these out there so that somebody doesn't take advantage of the person who really wants to invest, who really wants to be like they're financially savvy, or, you know, the 80-year-old grandmas who end up are like, they want a better life for their grandkids or anyone after. And so they decide to invest their money and then it's gone.
Yeah.
So the risk of fraud is definitely out there. And that's another reason why we want to just touch on that. But you can get through that with due diligence,
of course,
and education, which we'll talk a little bit more about here upcoming. But let's right now focus on the alternative investment opportunities that are actually accessible to non-accredited investors. So you mentioned the regulations out there right now. Well, the good news is that the SEC is always talking about changing regulations. So again, it's not going to be an arena that is reserved for wealthy or well-connected people only. They're actually opening up more options for non-accredited investors. What are some of those regulations that are opening up for them?
Yeah, absolutely. So there was the Jobs Act, which is the Jumpstart Our Business Startups Act. That's something that came into play that brought about crowdfunding. All of us have heard about crowdfunding.
Yeah.
You know, if you think about even like GoFundMe, like that's crowdfunding. That's not an investment, but, you know, it's gathering money from a big group of people to put it into a pot and utilize it. So that's something that came through that became really, really popular. And even non-accredited investors can participate in crowdfunding. Also, you know, we've talked about this before a little bit, but in future podcasts, we'll kind of get further into some of these specific regulations. Regulation A+, 506C, and Regulation D. These have all increased access to private offerings for these non-accredited investors. In future, like I said, we'll break down what each of those means. But for now, just know that things are opening up and it's always possible that things can change.
I love that. Doors opening, windows opening, all the things are opening. So before you know it, the playing field's going to be level. It's not going to be just those high net individuals being able to make these really cool investments in the alternative world. So something else that's really opening up things for non-accredited investors is technology. There's fintech, which is finance technology. So it offers really awesome interfaces for people to use, apps. I mean, everyone is attached to their cell phone. And so you have it at the palm of your hand and it will kind of walk you through how to make an investment. So it's almost like a wealth advisor in the palm of your hand. And it makes it really, really accessible, really, really convenient. And then there's also those robo advertisers and automated investment platforms. Again, something in the palm of your hands and uses the algorithm like your Netflix, like your Instagram, puts up all those really great ads for clothes that I don't need, but I definitely look at them constantly. So think about that, but with alternative investments, it's putting it up into your face every single day as soon as you're on your cellular device. But it's great because that is the way that the world is going. We want to be able to look at something and make a really cool investment, even if we might not be that educated on it, but hopefully they keep listening. We'll give them some more information so that they're a little bit more educated on that.
You could do some more research on that. For sure.
Exactly. Not only is there technology, but there's you touched on this earlier, there's great platforms out there. What other ones out there? Start with crowdfunding. You already mentioned that one.
Yeah. So if we're kind of popping into crowdfunding specifically, we've already talked about that. It allows individuals to contribute small amounts of capital. That can even be $5,000, sometimes even less, into these crowdfunding platforms. Something that I want to touch on is REITs and real estate crowdfunding specifically. There are platforms like Fundrise and Realty Mogul, which you may or may not have heard of, but you could always, poke into those platforms. And these enable non-accredited investors to invest alongside accredited investors in real estate projects. Kind of mentioned about some of these regulations prior. A piece of the regulations is that certain investments can allow a certain number of non-accredited investors to invest. alongside those accredited investors. So this might be a position that you might be in. Also, there's peer-to-peer lending platforms. This would be Prosper or Lending Club. They connect borrowers with lenders, and they allow non-accredited investors to participate in lending activities. Investors earn interest on their loans and diversify their investment portfolios beyond the traditional asset class, which is what alternatives is all about, diversifying your portfolio beyond stocks and bonds. And then also collectibles and art, we've talked about this. Masterworks and Rally, those are two platforms that allow you to invest in things like baseball cards, actual art pieces. I know when I was on Rally the other day, there was an Andy Warhol on there. There was also cars you could invest in.
Yeah, that sounds like fun. So you have a piece of something that's really cool.
Yeah, exactly. And I think even with Rally, you can go and see the pieces in real life, like they're real pieces. It's not just online, they exist somewhere. So It's a tangible asset that you're investing in. And this is a great way to tie your hobbies and your interests into your investment. Stocks and bonds, while they're exciting in the way that they make you money, and some people are really passionate about it. But I think that, when people ask, what are you into? A lot of times people will name, movies, music, television, those sorts of things, and cars. Those are things you can actually invest in through these platforms. And it makes it more fun, I think.
Yeah. And the nice part is that you don't have to actually go out and buy that rookie card or that really cool car. You can just own a piece of it. You buy in stocks, like into that actual commodity, or I guess not commodity, but that collectible. And so it's cool because you own a piece of it without having to put up all the money to actually own it, and you can go still see it. And I think that's really, really awesome.
Yeah, exactly.
Last thing I would say that, for non-accredited investors is that education piece. Non-accredited investors, they have to assess the risks going in. You have to see how much you can put up.
Yeah.
Sometimes there is a long, time horizon on that. And this meaning that this particular investment wants your money for 5 years. Can you go without 5 years without that extra money? You might be able to, but you actually have to sit down as a non-accredited investor and really think those things through and understand the risk tolerance. And then it will help you align your investment strategies with your individual perspectives and your preferences and all the things that make you happy.
Exactly. And, we talked about due diligence just a little bit. We're going to dive deeper into due diligence in our next episode. So stay tuned for that. Be alert, be aware. We've talked about how alternative investments are popping up everywhere. I've personally seen them on my Facebook and my Instagram, coming up lately. There are definitely some sites that I've been on because I'm like, oh, what's this? Click on it. Sketchy. So be aware. And always do your due diligence and stay tuned to figure out exactly what that means.
Thanks for joining us. Stay tuned for more insights in our next episode. And don't forget to subscribe to continue the journey with M2I. See you next time.
The content provided in this podcast is for informational purposes only and should not be construed as professional, financial, or investment advice. This podcast should not be construed as an offer to sell or a solicitation of any offer to buy any securities. We strongly recommend that you seek advice from a qualified professional before making any financial decisions.